Buongiorno, hier Emanuele Fiore.
Välkommen, Jonathan Nammerle.
Buongiorno, guys.
All right, so we're approaching the end of the year, and we figured we figured this would be a good time to sort of run through this year and what it's been like for us, not only in real estate, but in all the markets sort of put together in all the micro markets. And then we're going to, at the end of the video or at the end of the podcast, sort of go over what we see in the future and what we think it's going to be like, right? So, Emmanuel, we'll start off with asking you some questions because I think these are your strong suits. What do you think? What do you think this year has been like? And again, I'm not just talking real estate here. We're talking the micro market, real estate in general, right?
Yeah.
What has this year been like?
Okay, considering the fact that every sector has its pattern, so up and down, starting from cause and consequences from other sectors.
Right.
So, I mean, 2022 was an interesting year. Volatility is now our standards. So in every sectors, crypto, stocks, finance, real estate, art, NFT, vintage car, luxury market, basically. It's all an up and down from high to bottom in a really short time.
Yeah.
So our job as a real estate broker, as we always say, is to adapt to the market.
Definitely.
And this 2022 was really interesting. Obviously, after what happened in 2021, we kind of had the 2022 the one that we deserved.
Sure.
So meaning 2021. So if we're going backwards, we had 2021 that there was a 90-degree rebound.
Yeah.
And because of that, it created a lot of FOMO, a lot of mispricing or bubble, I would say.
Why do you think we had that upward slope in 2021?
So in 2021. So
why do you think we bounced back that heavily? Why do you think it skyrocketed?
Okay, first of all, COVID obviously was something. I mean, there are many theories about it. I don't want to dig into it.
Right. Yeah, let's stay away from the...
Yeah, exactly, away from politics and stuff like that. But COVID was obviously unpredictable.
Sure.
And so was a really fast occasion that occurs. And so basically there was a very fast dip. And when there are 90 degrees dip, usually there are 90 degrees spike up.
Or goes down, must come up.
But that's why. So if I have to make a comparison between like the financial crisis and this crisis that we had, and the recession in financial crisis or this one, they are totally different. So what I strongly believe is that when there was the financial crisis, the real estate market was the first one to actually be causing the crisis, because there was the ninja loans, subprime mortgages, all that stuff that basically let everybody buying home and getting mortgages and buy home that they couldn't afford. Yeah. And then without explaining so much, because everybody knows that when this was escalating, then went to a bubble crash. The real estate was the first sector that the dip. And then all the other followed. The financial market, luxury market, everyone else followed. In this crisis, it's a completely different one. Real estate, because we are brokers, so we focus on this, didn't trigger the crisis. It was actually one of the latest lagging sector that got hit.
And what was the first one? What was the triggering one for this one?
The first one after COVID obviously was the stock market and the financial market and the crypto market. And so was hit a lot. But then because of this fast recovery was pumped by printing money, basically printing fake money.
Yeah.
And the Feds, they were they print $2-3 billion in a very short period of time, and this was unprecedented. Yeah. So this printing money leads into a fast recovery, and causes also, because of COVID, there was unemployment rate, so there was there was a high rates of unemployment, work from home, so many unprecedented things happen, and the recovery was fast, but because of all this money printed, then there was a lot of supply. And people, they invested those money in stocks, in crypto, and many companies that they didn't even make money in the balance sheet, like Zoom or this new tech company they were born. people that were investing money on those, and those, in fact, Nasdaq stocks, like all the new technology stocks, they went an incredible evaluation in the stock market.
Right.
And unfortunately, many
even
people,
though they're not really performing that,
Yeah,
it was just the stock market being hyped up, basically.
Yeah, it was hyped up because of many reasons that I'm not telling now all of them, but
Sure.
But even NFT, you remember? Until 6 months ago, everybody was talking about NFT.
There's
now
NFT
you don't hear
parties
NFT
every corner you were at. There'd be an NFT party.
Those CryptoPunk.
Yeah. And that's, I mean, so here's what I'm sort of gathering from this. And this is 2021, part of 2022. It's almost like COVID put us in this sort of hype state.
Yeah.
Where it's like, okay, now we're just going to, we have all this money and we're just going to go spend it on crazy stuff.
Yeah.
And causing a lot of sort of hype with everything. What was the other thing? There was the AMC stock that went crazy.
Yeah, I mean, there were many, there was the AMC, there was the GameStop.
Right. All of these that didn't, where the companies are actually shit. Right.
Yeah. The stocks that were Sunset Company, and the stock price was free falling. But this is even another matter. But this is all correlated to the fact that there were, unfortunately, a lot of people that they were not expert in the sector. They were putting money without doing due diligence, without they were investing in stocks or assets that they don't have an intrinsic value. Right. They were just speculative stocks. Yeah. And then there was the FOMO. When you hear even your hairdresser talking about something until 2 days ago, it means it's over.
It's over.
That was the FOMO.
Right.
So this FOMO created this high up in everything. So crypto went to all-time high, Bitcoin at $62,000. Stock went up 30% from the current normal value, actually. Vintage car market, watches. You remember, imagine Patek Philippe sold this. I mean, this is another thing. But
sure, but still
on
crazy.
On that line, Rolex, they were traded at 3 times the price.
Yeah, you couldn't give them even like the regular Rolexes were hard to get. Patek Philippe, what was the
Tiffany.
What did it sell for?
It sold for 6.2 million, and I was actually at the auction.
Yeah.
And if you click the link above, you will see me at the auction.
We gotta see that. We gotta see that. It's a great example, though, to show how crazy people are going with this.
One watch that at retail was 32,000. The Tiffany maybe was 50. He sold for 6.5 million. So this is the perfect example that is applicable to every other sector where the FOMO got into an insane level. Even cars. Yeah. Like nobody ever made profit on cars. Even a stock car, like for example the G-Wagon. The G-Wagon 63 AMG that is sticker price around 180,000. It was reaching prices close to 300K.
Yeah, and price. That time. I mean, cars is something. Cars is usually something as soon as you leave the lot.
Yeah.
It's supposed to plummet. Yeah. Right. No matter what the car, basically.
But that one was also another cause because of COVID. That was the supply chain. So we had a lot of factors, very unprecedented, that the supply chain was disrupted, was backed up. All the boats, they were not...
shipping and all that stuff. The so materials, all of that stuff.
The material went up, the shipping cost, everything went up. So this created an incredible bubble in every single sector. And again, I like to reinforce the one that struck me the most. Every day at those times, there were a new NFT coming. There was the Koala Punk, the Crypto Punk.
It was everything. That was insane. And I mean, I read an article today, and it was Justin Bieber who bought an NFT. It was like the ape something.
Yeah, the ape.
He bought one of those, I think, for 2.6 million. Today it's worth 60 grand.
Yeah, but this is also
60 grand.
You know what's the sad? You know what's the sad thing? The sad thing is that in all this discovery of NFT or even blockchain or many other things, actually they have a good. The problem is not in the technology. Technology never failed.
Right.
Like the NFT is a non-fungible token, will always be that way.
Yeah.
The crypto is based on blockchain. The blocks, they will still be there and grow. So the problem are the humans that speculates out of it.
I think it's the crowd that it attracts, because it attracts that hype crowd because it sounds cool, it sounds new. So they're undereducated. They get into it and thinking, oh, crypto, NFTs, it's an electronic art thing. It's like, so they get into it and they don't know what they're doing.
They don't know what it is.
But they have the FOMO.
Yeah.
So they're like, oh, they're making money.
Because
they put all of it on it.
The NFT, if you think about, is something awesome. That will be even used in the
fantastic.
future for a title of real estate, because
it's fantastic.
it's a digitalization of a contract, for example, non-fungible token. It's actually a fantastic idea. But the problem that they use that idea to create communities. Like, oh, if you buy the Bored Ape, you're going to
have
be
access
invited
to...
So they try to give this roadmap. And every day there was a new NFT with a new roadmap. There were even new NFT. They were born with like a landing page that even 5 years old kids was making and put in a roadmap, and everybody was following. And new crypto coins. I mean, I can even build a
we can do
coin.
that.
So everything was speculative. We know that Bitcoin is a speculative asset, doesn't have an intrinsic value based on cash flow, but still as a store of value. But anyway, without going to the specific, what I wanted to say here, that after the COVID dip, there was a big recovery, and all of this pump from crypto to stock to vintage car, art, real estate itself. In the Hampton in Miami, you remember the prices, they were 2x, twice the price. But this is also another thing, because people were moving out, working from home, you don't need to stay in New York.
Right. You want more space.
But still, this was not caused from real estate. And I remember clearly after March, there was the peak of stock and crypto. I started to say to my friends that they wanted to list a property. I say, listen, dude, you have probably another 1 or 2 months. I remember I was telling them from January, we are not in a bubble, but we kind of are.
Yeah.
Why I didn't say we're not in a bubble? Because earnings of company, they were actually, not the NASDAQ one, but they were actually making, and still today making money. So that's why I'm saying it's a different kind of recession and different kind of crisis, because it's not, crisis is usually triggered by company earnings going down.
So I have a question on this for you. Do you think, because I think all of the things you just said, they're here to stay. Crypto's there to stay. Luxury jewelry is there to stay. Luxury cars are there to stay. We're a generation that's way more luxury and way more sort of valued in those aspects than we ever were before. And more people have access to it. There's more rich people than there ever were.
Oh, yeah.
So do you think the markets from now on basically will always sort of rely on all of these different sectors? So instead of it just being the real estate bubble that causes something or something else, now it's all of them that we always have to consider put into one. Whether it's art, whether it's watches, everything that's sort of luxury related. Is it everything we have to watch out now for?
Well, when I look at one market, I'd like to, let's say, do comps on all the other market and macroeconomy.
To see how it's...
I think some sectors are all correlated. So let's say New York real estate is a luxury real estate.
For sure.
Because the median price is much higher than the rest of the states.
Mm-hmm.
And so it's very much correlated to the luxury market, and very much correlated also to the traditional finance, and to the crypto market, I think. Like, to give an example, right now, today, there are, I don't know how many thousands of G-Wagon put on sale on AutoTrader. Until 6 months ago, you couldn't even find one.
Yeah.
Okay? Why? For example, fresh new money, crypto money made out of a trade in 2 months.
Right.
They were usually flashy money, and they like to flash with a nice G-Wagon.
Yeah, of course.
So G-Wagon, supply and demand, went up to 300K almost. And now, because of this crypto bear market, crypto winter, you see thousands of G-Wagon on the market.
Yeah.
Thousands of Defender, thousands of vintage cars that until 6 months ago they were not. So this is correlated. For example, if you are a vintage lover and you are in that market, you have to look at those stuff. Who buy this car? Right. How is he doing, the guy that bought this car, and how will be doing? Yeah. For example, so I see this connection between cars, some especially, or even the luxury cars, Ferrari and stuff like that, or watches, for example. Watches is a totally different game, because it's about the branding, it's about the accessibility. But for example, now, after 1 year of not having access to an experience of buy a Rolex or a Patek or an Audemars Piguet or a Breguet, whatever you want to call it, now Rolex is coming up with the second-hand policy. So they will start selling in-store second-hand, because also all these showroom, they couldn't sell anything for over a year and a half. So everybody was wondering how they make money, these guys. Actually makes sense that everything is correlated.
Yeah.
So the guy that buy that specific car wants that specific watch and wants that specific real estate and wants. So what I was saying, basically, after this deep dump and pump, then we got into 2022. So the top of the pump was to March 2022.
Sure.
Then everything started to go down. Traditional market, started to go down crypto. Yeah. And then I was saying to our seller, listen, guys, I was saying this in January, list your home now, because you have a 2-3 month time frame, because we are at records all time. The market cannot go that time. Obviously, it's easy to say afterwards, but I swear to God, I was saying this.
Right.
And in fact, starting, let's say March started the deep down, real estate was lagging 6 months after.
Yeah.
And all the prices, they were starting coming down. And because real estate is one of the latest one, I truly believe we will be still probably another 10% down.
10%.
But we are almost, it's impossible to catch the top and the bottom. But course, I think I hope we are almost at the bottom. I think we are not at the absolute bottom yet. No. Also in stock market, I think I see the 3,600 for the S&P very soon.
Would you think right now is a good time to buy? Any stocks or anything like that is now a good time to
Well, there are many stocks that are a great buy now. Yeah. Look at Meta, for example. Meta is at an all-time low. Right. Look at Alibaba. But there are so many that the average, they went down, let's say 30%, 20%, depend from NASDAQ or S&P. There was a price rebound, but today we went down significantly again. But there are many stocks that are hammered. Yeah. And there are many stocks that are hammered and they will never recover.
They won't come back.
The stocks that they didn't have a cash flow positive, for example, Zoom or all these speculative stocks.
Yeah, GameStop. All that
and then this is another conversation. We're talking about Moat. We're talking about many other things.
Right.
But to conclude, I would say this year is the year we deserved it, not because we were being bad, but because the past year was too good to be true.
Yeah. Remember, it was too much of everything.
Whatever has been given to you, for example, in finance, they will take it.
They will take it, yeah.
It's always a matter of a cycle. Always a matter of, but the good thing, good or bad, this wasn't, in my opinion, triggered by real estate, but real estate was one of the latest sector falling after the domino effect.
Yeah.
And I remember precisely, there was the finance going down, everything goes down. And I said, guys, list the apartment. If you miss that 2 month,
then you're going to be down,
Then you're going to be start the downfall. And now probably it's again a new moment to list the apartment, to list the properties again. Because let's say you're getting ready now, we go down, another 10%. Yeah. And then when the rebound starts, you are ready.
Yeah, you're there, you have everything ready to go.
Yeah. Nobody can predict anything, but...
Of course not.
The big mistake that everybody do is that they look at the stock market like it's the mirror of the economy.
Yeah.
The stock market or the crypto market is not the reflection of the economy. The stock market behave and act before the economy. And that's why everybody makes mistake and buy high and sell low. Yeah. Because when the stock market goes down, the economy, there are two different graphics. So when the stock market goes down, it's actually not when the economy is doing bad.
You're saying so
the stock market priced in the future.
Right. Okay.
So when we were at the top of the bubble, it was already going down. It's usually 6 months later, the economy.
So when people, and that's kind of fucked up that they do those on the news every time. So when you hear it in the news, like this one is down 50% today, this one is down, there's really no reason to freak out at the moment.
Remember, when you read the news and you make action out of news, you will be always late to the party. And
exactly.
You will always lose money.
Yeah.
Because the news is 50 down. Oh, panic, let's sell.
Yeah, exactly.
And then the day after goes up.
Yeah.
Because those was already priced in.
Yeah.
So what I'm saying now after all this decline, we are basically at the current level of pre-COVID. So we did like this, then we go up, and now we are again at the support. I'm not talking all about finance. I'm talking almost about everything.
Yeah, sure.
So now we are in a limbo time. Everybody talk about stagflation. We are afraid that we're going into a stagflation, which is the worst case scenario because it's a slow and painful downtrend and recession. Everybody's talking about recession.
I know.
After 20% down on the stock market, you are officially in a recession.
Yeah.
Okay, but we came down 20 and then we come up.
But we are in one.
But what I'm saying now, let's say everybody now starts panicking. Oh, 2023 will be a recession. Let's call for the bear. Guys, the stock market already priced in the recession. That's why we are 30% down.
Here. Yeah.
So by the time you are announcing the recession, it will probably another 1-2 months, and then it will start to go up.
Yeah.
You understand?
So I do.
So we are already in the recession without being officially in the recession.
Right.
Because the recession, the medium, when from the high it goes below 20%, is already called the recession. And we already reached that, and we went above. But what I'm saying is that the stock market already priced in that. But there are many things to talk about. Like, for example, there are earnings of company that are always that are still growing. And then there are many. This year is crazy. There are the layoff of big companies start firing a lot of people. I mean, look at
That's
Twitter.
Going on a lot. Yeah,
look
Twitter.
at Tesla. Look at.
It's all of
so
those,
there is a lot to talk, but.
No one's hiring. Google hiring freeze. Amazon hiring freeze in the higher end positions. So there's a ton.
But at the beginning of 2022 was funny to see, like, basically every idiot could make money.
Yeah,
in
everybody.
Every sector. Everybody was the smartest. Everybody was rich, was cool, even though people were not working.
Right.
Or were working from home.
Working from home. They were finding some kind of way to do something. But you're right, though. It's not just in one thing, right? It was in all the sectors. There were people trading watches. There were people trading cars, trading shoes, real estate agents. It was everybody.
And you know what's funny? That most of salespeople in every sector, they don't really look at the other one.
Which is strange, right?
Everything is correlated, and so
did we just figure this out?
If you follow the behavior of other sectors, you can kind of predict what yours will be doing. So, for example, in real estate, I predicted what was about to do because of the other sector. And I know also, for example, you know me, I invest in cars. I invest in watches. I invest in art. Art.
You make art.
Sotheby's, there were prices like unprecedented price. Like in Blue's art. And so everything that goes up has to come down.
Yeah.
And you just need to anticipate which sector will go down first or will go up first.
Yeah.
And then you move it from there. So I guess we had the year that we deserved, and we kind of expected, if you were knowledgeable about to understand that we were like, it was too good to be true.
Yeah.
Like nothing made sense at the end of that bubble.
Yeah, and it can't continue.
Everything was
like
making
that can't
money.
Continue. Yeah, stuff like that can't
Everything
continue.
was hyping up.
So what do you see for 2023? Where are we going to be at?
I think Q1 of 2023, we will see a little pump again in everything.
Yeah.
With another, not dump, but with another 10% down in every sector.
Yeah.
I believe. And then, if no other major event will occur, which is so unpredictable. I mean, look at the trade war, China, USA, with all these like TSM, the Taiwan war with China, the delisting. I mean, it's so
What sector do you think would go first? What sector is more likely to go down first? Because I've been seeing it's the crypto, it's the NFT world that goes through shit quickest, right?
Everything. Well, the speculative assets are the first one to go up first and down first
because they were crazy.
There is no intrinsic value.
Yeah.
They don't make. It's not a cash generative asset, so you cannot calculate the intrinsic value. What that means that people price those assets based on psychology.
Yeah, so it's basically worth nothing. To be clear, it is worth nothing.
Yeah. And it's basically the fuller game.
Yeah.
You are full to buy this because you think that you can find a fuller guy that will buy higher.
They will buy
from you.
higher, yeah.
But the game, what's the game? To never be the last one,
Yeah.
the full of the full. Because if
be
you're the full of the full, you will always lose money and sell it lower.
Yeah.
So those assets are the one that, but I think they already went down enough. Like crypto is 90% down. Almost.
Yeah.
I mean,
and that thing with what was his name, Sam Bankman-Fried.
and then this FTX stuff create a lot of skepticism. And this is sad because, again, it's not a blockchain problem; it's a human problem.
But they ruined the reputation of that now. Because, I mean, people before were already skeptical. But now knowing that you can lose, what was this, $30 billion? And the thing is, you can't get that back. The government doesn't back this. There's now government backed.
This is a long story. Now he's even trying to open a new company to get the money back to the investor. I mean, this is in the Bahamas. It's a very long story. This one.
We'll take that another day.
We'll do a podcast only on that on another day.
Yeah.
But, well, I think overall real estate is probably the most steady and sure market. First of all, because it's a real asset.
Right.
I mean, there are walls to be touched.
Exactly, yeah.
It can generate cash flow through rent, so you can give an intrinsic value. Also, talking about the New York real estate market, is just more steady because, generally speaking, New York people are wealthier than anyone else, so they don't panic sell, and so the prices are kind of stable. Of course, they go down. Maybe they go down. Transaction goes down. Because people are holding. We are in a moment.
Price hasn't really gone down much. Transaction a little bit. I think contracts that were signed this month, I think was down 6%. Only 6% compared to last month. And over the year, it's down 11%, which is not crazy.
Yeah, it's not crazy at all compared to other sectors that are down 80%. But what I think also, the transaction we saw in the real estate market are mostly because people, they were not buying or selling because of panic selling or buy because it's a good deal. They were doing that. I mean, some of them, yes, but they were doing because they were moving. During COVID, we saw many people moving from New York to Miami, to the Hamptons, and in other states. They were making more money than they could afford New York prices. And
they're coming in.
Those transactions, they are still low but kind of steady because of a lot of movement. But I believe that in New York there was not such a huge panic selling like.
And it never really, to be honest, New York, I never really think there will be.
Yeah,
you know, like New York always bounces back. There's one of those, and it's a terrible analogy to use or a terrible sort of comparison. But even when something like 9/11 happened, right? And 9/11 was awful. It had a huge impact on the city. But people were still like the next day, someone was like, high rises are done. No one's ever going to live in high rises again, right? The prices are going to plummet. My condos, they're all worth nothing.
And then
half year later,
all the skyscrapers.
And now they pop them all up.
Yeah,
you know,
57th Street is full of them.
So
downtown
New York will always bounce back. You know, I think we've proven that by now. New York City will always sort of. I mean, if I was to invest in any sort of city or buy real estate, it would be if it was for money reasons. If it was my personal reasons, if I want a vacation home somewhere else, maybe. But if it was somewhere where you know your money is somewhat safe and also safe from inflation, I think it would be New York City.
Yeah. So long story short, basically, guys, do not take action and decision out of news.
Yeah. Take it from us.
Read and take your own decision based on your own due diligence and strategy. Because if you read the news, you will always be late to the party.
You're already late to the party.
I mean, read the news, but
read the news, but don't react
them.
on them. Yeah, don't react on them. Don't make decisions based on them.
So, what about your 2022, and what do you think about the 2023? You were happy about it, or?
I mean, so for me, 2022, honestly, again, I didn't see much of a change. Like I don't think it affected me as much on like an income level. Maybe a little less deals being done. But to be honest with you, the deals that I've done this year compared to the deals that I was doing last year, they were almost a little simpler. Because this year it cut away the fat. So this is people who are unsure. They don't know if they want to really buy. Or now, people that are buying currently, they either buy with all cash and they can do it. They know they're going to buy. or the people who are still relying on finance, if they're willing to buy in a market like this, that means they're sure. That means they really want to get something, they're committed, they need a home. So for me, this year has actually, it's sort of cut away all the people that are doubting. There's maybe less people, but they're more serious now. The people who are coming to us and asking for help, they're more serious, they're more, I trust they'll actually buy something or sell something, right? So I think this year it's been good.
And in fact, we didn't talk about this, but I'm sure, the news are all over this, the interest rates of real estate. This is another factor that drove our transactions sales. Interest rates were high, so people that they were about to buy with mortgage, they basically disappear.
Yeah.
But then again, guys, you can buy now with a good deal, refinance in a better terms in few years. So this is another things to be knowledge about.
We just have to adapt.
We had cash
again.
Yeah,
we adapt.
And so also the real estate was affected by who? By the Feds. Interest rates point, inflation went up 7-8%. Now as peak is coming down. Interest rates are still going up, but in a slower pace rate. And the bond prices, interest rates goes down, bonds goes up.
Okay,
good. Rates goes up, bond prices go down. Remember this, guys. It's a golden rule.
Yeah.
If you understand this, you will understand a lot of things in life.
So what do you think is what can we leave them on a good note with? What can we give them advice on for the next year? What would your advice be if they're making any kind of financial decision in the next year? What would your advice be?
Well, that's a good question, and nobody has a straight answer to that.
That's right.
But if you like something in any sort of sector, do not wait the bottom. You're already buying at a good price now. Yeah.
So you're already there.
It can go lower.
Yeah.
Yes, it can go lower. If we go into a recession, it can go much lower.
Sure.
But I think we already priced in the recession a lot, even if we will be calling recession probably in January.
Yeah.
So
you're saying the time is now.
Yeah. The average time is in this period. Not now today, but in this period.
Tomorrow.
And it's like dollar cost averaging. And then the median price, if you buy something, it will be a good deal.
Yeah.
It will be a good deal. But for the future, there's a lot to talk about. We'll talk about this in the next episode.
We will we'll wrap it up. I hope you guys enjoyed it, and we thank Emmanuel for all his knowledge here. Well, it's good to have him on. And Happy New Year's, right? And Merry Christmas when you guys get there.
Merry Christmas and Happy New Year's. Thank you, guys. Ciao.
We'll see you next time.